Hey, how's it going, everyone? I just woke up. It's about 6:15 a.m. So excuse me if I sound tired. I'm not. I'm actually pretty awake mentally. Today, we're going to go ahead and talk about Costco. This is one of those companies where no convincing is necessary to understand that it's an amazing company. Everyone on this earth knows that Costco is awesome. And it's one of those stocks that rarely goes on sale. Because if we look at their 52-week range of $476 as their low and their high of $787, right now, they are off from their 52-week high, which is pretty rare because Costco is always flirting with reaching a new high, inevitably. But it is still too expensive, or is it? In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or a disgusting dividend stock. And in the end, we're going to figure out what the intrinsic value is. I always think of Costco as Price Club because when I was a kid in the 90s, we used to go to Price Club before they were acquired by Costco. The business model of Costco is beautiful. It's not the store merchandise and product sales that sets them apart. It's their predictable, reliable, and growing membership subscription fee. I hate it so much. But there's a big business reason as to why companies have moved on from one-time payment models to subscription-based ones. Like, think about it as a CEO. Why charge a consumer one time in a lump sum when you can charge them every single month or every year? I don't make the rules, but it's the name of the game now. And let's talk about what you see on your screen right now. Can you believe that Costco started trading on the stock market in 1985 for $1.67 a share? If there was a time machine, one of my first priorities would be buying a house in California. And the next, I would have loaded up on Costco stock. This past year, Costco generated $237 billion in net sales. And don't even get me started on their store brand products known as Kirkland Signature. As I am filming this video, I am literally wearing a Kirkland t-shirt that I bought the other day, and it is fantastic. And by the way, I also play soccer. And whenever I go to pick up games, I actually like to wear Kirkland socks. Call me weird, but I think it's a better value than the other name brand socks like Nike or Adidas. I have a thing against Nike because I think their clothes look stylish, but their socks and shoes are designed to fit whose feet? Who can wear Nikes for 8 hours a day and be comfortable? They're so narrow and cramped in the toe box. Actually, you're right. I'm getting off topic again. Did you know Costco is now scanning IDs at the entrance before you walk in instead of just giving you a head nod when you flash your parents' membership card? This is crucial because it's all about data analytics. Now they get transaction data, behavior data, and demographic data from the first initial scan to when you check out. Their finance team and marketing team will be able to make better business decisions based on how long you are in the warehouse, how much you buy, what day you visited, and I suppose by scanning cards at the beginning, it cracks down on people sharing membership cards. Consumer data is the new oil money. Your data is very valuable to businesses. Oh, and the slide on your screen right now is how fast and aggressively the Costco membership audience is growing year over year. And this is in millions. So back in 2014, there was about 76 million members of Costco. You fast forward throughout the years, and now we're looking at 127 million. And that's why every company and business has a stupid mobile app for you to download. Because when you use their app, they can log your data in which they can sell to advertisers and other companies. Which brings me to today's sponsor, which is your puffy left nipple. Hey, tell me right now, wouldn't that have been the perfect opportunity for a sponsor plug? But what you see on your screen right now is the number of new warehouses they expand by each year. So during the pandemic, they were only able to open 13 new warehouses. But as of this year, they are expecting to open up 31 more warehouses. Honestly, I do not see any signs of Costco slowing down their Roman Empire. It's just spreading everywhere. And at the end of the day, isn't Costco just like Sam's Club, BJ's, or even Walmart? Well, what's separates Costco from its competition and other retailers? Costco focuses on the variables other retailers don't seem to prioritize. But I'll say this, every major retailer in the US is growing in their revenue, except for maybe Home Depot. To go from $151 billion in 2021 to $153 billion isn't the greatest increase in comparison to their peers. But among these 5 retailer brands, I actually think Costco is the best one. So what are the variables Costco does better than the rest? Well, number 1, Costco takes care of their people. I remember back in high school over 20 years ago, yes, I'm old, I applied to Costco twice in the summer and I never got a call back. I actually wanted to be a cart pusher so I could have some spending money. Even as a young teenager, I knew how good Costco was to their employees. And the second thing that Costco focuses on is minimizing store theft and loss by their warehouse floor layout and checking receipts at the exit. They put all of their high valuable items near the entrance where the employees can guard those items. And I think Walmart is now implementing this practice across all of their high risk stores. And the third thing that Costco focuses on is that they optimize their inventory shelf life durations and only sell what sells. So when it comes to like coffee or whatever, they don't have 20 different flavors. They only have the original one. Plus, their stores are warehouses, which makes the square footage utilization very efficient. And as a guy that comes from a supply chain background, you love to see it. And Costco has a 93% membership renewal rate, which means a majority of the people see value in paying their membership fees. So expanding upon that first point, when we think about Costco, their employees generally have good things to say about their company. Like right now, if you pause this video and you look on Glassdoor or even ask that family friend who works for Costco, you'll see that they actually enjoy their job. And I think that stems from the fact that Costco pays their people well, gives them good healthcare benefits, and they promote from within. When I was doing my MBA recruiting, just for fun, I actually wanted to work for Costco corporate, so I put in an application, knowing at the back of my mind that they had rejected me 2 decades prior. And let me tell you, unless you worked at the warehouse as a cart pusher, or as a cashier, or as a stocker, it is nearly impossible to get a white-collar job with Costco because they only promote from within. So unfortunately, I had to let the Costco dream die. But the downside to this is without outsiders coming in, especially at the leadership level, the systems and process in place are most likely outdated and they operate in an echo chamber. Then again, that probably explains why their website is so trash. If you've ever been to Costco.com, you know what I'm talking about. It looks like it's straight out of the early 2000s. With all of that said, if you are in the job market, I would give Costco a chance. Even if you are a cart pusher, their average pay is quite decent, and it would be better to push carts at Costco than it is to push carts somewhere else. And something else you didn't know about Costco is that Costco actually pays a lot of money up front to buy the land of each expansion location. So instead of paying a monthly rent to Realty Income Corporation, Costco owns the land that their warehouse building sits on. So looking through their paperwork, look on the left side of your screen. At the end of 2023, Costco owned 677 of their buildings and the land it sits on top of. And they were leasing about 184 warehouses. And the ones that they lease are usually the ones that are overseas and international. And in their 10K, they clearly state, our primary requirements for capital are acquiring land, buildings, and equipment for new and remodeled warehouses. So Costco might as well be a REIT on the side, much like another company we are looking at today. So for example, a warehouse that they lease overseas is the new expansion location that they opened in January of this year in Shenzhen, China. I don't know if I'm pronouncing that right or not. And just look at the amount of people waiting outside to get in through the door when they open. And I think it's pretty cool how they built in an integrated garage with the warehouse. That's awesome. And by the way, I've been to Costco overseas, and it's just as crowded as it is in the States. I would argue in places like China, Costco is probably going to generate more revenue per warehouse in the next 5 to 10 years. And the last point that I want to make about them owning the land is this. If they ever decide to exit the retail space, they'll have a ton of warehouses in their portfolio portfolio and the land to rent it out to other companies who need it. They can literally pivot into becoming Stag REIT 2.0. And if you didn't know, Stag is a REIT company that rents out warehouses. So that's where I see the vision if things go wrong for Costco. And what's interesting about Costco's dividend history is that they didn't start paying one until 2004. And since then, they've been growing it at a rate of 13% year over year. Can you see why so many investors are obsessed with Costco? Their numbers make a lot of sense. It's a winner for a good reason. And before I forget, Costco posted their Q2 earnings recently and it was fantastic. Their sales went up by 6% year over year and they posted $57 billion in sales in 3 months. $57 million. Their net income went up by 19%. Like, what the heck? You would think we are talking about a tech company, but it's just Costco, the business that sells a hot dog and a drink combo for $1.50 at their food court. Now, here's a short story time. I remember when my partner and I first got together, we didn't have that much money because I was in grad school. So we used to have dinner dates at the Costco food court. Those were some good times, and I think that's one way to gauge a person's character. If they get all pissy and angry about going to a food establishment that's beneath them, you know that they are not a good person. Or if they treat the server with a whole lot of rudeness, then you know that they lack manners. On this YouTube channel, you get dividend knowledge and dating advice. That's why you should subscribe. And the only real threat I can see is if less and less people decide to have families. If that's the case, buying in bulk makes absolutely no sense. If you are just a single guy, it's a lot more efficient to just shop at Aldi or Walmart. And if this trend continues of people having less kids, that could be bad for Costco. But in the meantime, their numbers are just beautiful. Their stock price up against the market, aka the S&P 500, is a compelling argument in itself. Since 1985, Costco's stock price has gone up by 16.9% year over year, whereas the S&P 500 has only gone up by roughly 9%. So I think we all get it by now. Costco is amazing in every single metric. Now, Costco has a dividend yield of 0.5%. Yes, I know that is not the highest, but this is what I want to call out. If you look at the bottom of your screen, you'll see a bunch of stuff that's circled, right? Their dividend graph looks odd because every so often, Costco issues a special dividend on top of their regular dividend. So back in 2015, that special dividend was $5 a share. In 2017, that was $7. In 2020, that was $10. And in 2023, they decided to pay out a special dividend of $15 a share. So when you think about this annual dividend payout being $4 and then getting $10 or $15 on top of it every so often, that means their dividend yield is probably closer to like. But anyways, their average dividend growth rate is just shy of 13%, that double-digit number that you love to hear and see. Their dividend payout ratio is 26%, which means that their dividend is sustainable and it's very healthy. And they have been increasing their dividend payout for over 20 years. Back in 2015, their dividend was only $1.55 a share. However, as of this year, their dividend payout is now $4 a share. So don't dismiss Costco just because you think their dividend yield is too low on the surface level. So based on their dividend profile, we can conclude that Costco just looks absolutely delicious. With $10,000 invested in January of 2014 and fast forwarding 10 years later, that initial $10,000 would turn into $76,000, which spits out an annual CAGR rate of 21.9%, meaning your money grew at an average rate of 22% a year. Guys, I'm just trying to tell you right now, $10,000 to go to $76,000 in 10 years, that is quite literally the definition of a dividend compounder with cheese. So even though their dividend yield might not be the highest, wouldn't you rather see your money increase by 700%? I don't know. I guess some of us have different priorities. In their best year, I guess that was back in 2021, the stock went up by 51%. However, in their worst year, they went down by negative 19% 2 years ago. So when we think about Costco's total returns, I think this is phenomenal. This is beautiful. This is exactly what you want to see in an investment. So the next thing we are going to be looking at is the revenue. Investors call this the top line. It's good to look at some numbers and finances, right? So back in 2015, Costco, the warehouse company, posted $116 billion of revenue. And as we look from right to left, their revenue has been climbing and going in the right direction without fail. And as of last year, they posted $242 billion of revenue, which was an increase of 6.7% from the year prior. What more can you ask for from a company? So as I am evaluating Costco's revenue numbers, this is nothing short of beautiful. This is amazing. Next, we're going to look at their net income. Investors call this the bottom line. Now, when we look at 2015, their net income was $2.3 billion. And as we the subsequent year, they went down by negative 1%. However, the subsequent years thereafter, they've been on a roar, double-digit growth up until this past year, where they posted $6.2 billion. So to see their bottom line go from $2.3 billion back in 2015 to $6.2 billion as of last year, amazing. Once again, another green flag for their numbers and finances. This is great. Now let's go ahead and take a look at the sentiment among the management team. Like, what are they doing with their shares? Are they bullish on the company? Are they selling? Are they buying? Let's figure that out. Oh boy, this is not good. So as of this new year, the senior leadership at Costco has been selling their shares. And the year prior to that, nothing but selling. Nobody in the company is buying shares right now that's on the senior management team. Now here's where I'm trying to come from. If it was something like maybe 500 to 1,500 shares, I understand, right? Sometimes we need that extra capital to do some home remodeling or to buy a new car. But to see the senior management sell 67,000 shares to 200,000 shares to 62,000 shares, not a good look. Which means on paper, they think the company is overvalued right now, so they're selling to lock in some of those gains. If we saw some grain sprinkled in here and some senior leaders were buying in, then you would see a healthy sentiment among the leadership. That's up to you to interpret. This could be a good or a bad thing. Next, let's go ahead and take a deeper look at the technical indicators to see what the stock price movement has to say about the company. So based on the trading pattern, at least for the past 52 weeks, Costco bounces off the line of support again and again and rallies to a new high, which is pretty evident. However, as of recently on April the 4th, Costco had a sell-off and reached an RSI of 36, which is uncharacteristic of the company because they usually have an RSI that hovers around 65 to maybe like 75-ish, right? But since April the 4th, investors have been buying back into the stock. So based on their movement and their history and their pattern, it's not out of the question for them to rally back up to their line of resistance, which will be the upper Bollinger Band at $747 a share. But I do want to call out that technical indicators are super subjective, but I still look at it to see the volume and to see whether or not investors are buying more shares or selling more shares in that balanced pendulum. And now we made it to my most favorite part of the video. We're going to run some valuation models to figure out what the intrinsic value of Costco is.
When I calculate intrinsic value of a business, when we buy businesses, and whether we're buying all of a business or a little piece of a business, I always think we're buying the whole business because that's my approach to it. I look at it and say, what will come out of this business and when?
And the first one is going to be the multiples valuation. Essentially, we are going to look at the PE ratio of the peers in the same industry as Costco to figure out a market-derived price for Costco. Now, it's really hard to find specific peers to Costco because in the US, when I think about the other wholesale warehouse companies, they just pale in comparison, like BJ's and Sam's Club. Although I do think Sam's Club is good, they don't have the numbers that Costco does. So with that said, I tried my best to compile a list of retailers with a premium valuation and are trading for a high multiple. And my rationale behind that is because Costco currently has a PE ratio of 47.8. So when we consider these retailers, the median PE ratio is going to be 29.1. When we take that into consideration with Costco's earning per share of $15, this spits out a multiples valuation of $444.79. cents. Moving right along, now we are going to do the discounted cash flow analysis model. Essentially, their free cash flow is going to tell us an intrinsic value for Costco. Costco's free cash flow is, to say the least, inconsistent. Sometimes it goes up by double digits, and other times it goes down by double digits. And I think that's because they're expanding kind of aggressively at 20 to 30 warehouses a year, and it probably requires a lot of capital to build out the infrastructure. But also remember, they're willing to pay a lot of money up front so that they can buy the land outright. And buying that much land for a warehouse and the adjacent parking lot probably takes millions of dollars. But I'm not trying to give excuses or justify why their free cash flow is going down. I just thought it's good to know why their free cash flow isn't going in a positive trend year after year. But anyways, in 2018, they posted $2.8 billion of free cash flow, which is pretty good. And as of last year, their free cash flow is sitting at $6.7 billion. When we take that into consideration, the average growth rate that their free cash flow has been growing year after year is 29.3%. However, that is a little too optimistic for my taste, but I bet Wall Street is calculating the DCF price for Costco with that 29%, but I just want to play it safe and be a little conservative. So instead, we're going to plug in 20%. So we're going to assume that their free cash flow is going to grow at a rate of 20% year after year. Taking that into consideration with some balance sheet numbers, this gives us a DCF price for Costco $642.23 a share. So it's overvalued according to the multiples valuation and the discounted cash flow analysis model. Next, we are going to do the dividend discount model. Essentially, their dividend is going to tell us an intrinsic value going forward. Now, it's important to keep in mind that special dividend that Costco tends to pay out every 3 to 5 years. Because if we were to plug in that special dividend right here in 2020, then the average dividend growth rate would be a lot higher. However, that special dividend is not guaranteed. Whereas the ordinary dividend that you're going to get every 3 months is down on pen and paper, like you're going to expect that. The special dividend is just a treat, a cherry on top. So I do not want to bake that into this model. But anyways, Costco has been growing their dividend payout at a rate of 19.6% year over year. That is nothing short of phenomenal. However, I just feel like, is that sustainable? Going forward, can they actually sustain a 20% dividend growth rate, right? So instead, let's just be a little safe and play with a little caution. We're going to bake in 7.5% into the formula instead. A warehouse company growing their dividend payout by 7.5% year after year, that's a lot more believable to me and sustainable than 20%. With that said, their DDM price is going to be $997, which is still a lot. Can you imagine if I plugged in that 19%? This number would be something crazy like $3,000. And the last valuation model is going to be the Benny Graham's valuation model. Essentially, the growth rate projection alongside with the corporate bonds yield rate is going to tell us an intrinsic value for Costco. Now, the analysts believe that Costco will be growing at a rate of 16.25% year after year, which to me is just mind-boggling because I have to remind myself that this is a brick and mortar retail company. This is not a chip manufacturer or an AI company or even a tech giant. Like if you go to their mobile app or website, it looks like straight trash. So it speaks volumes to their business operations and finance fundamentals of how well the company is ran. But anyways, the Graham valuation is going to be $306.50, which brings us to the conclusion. Will Costco be a delicious or a disgusting dividend stock? First, we're going to have to figure out what the intrinsic value is. Hey, Jimmy, can you give the people what they want, which is a drum roll? Thanks, man. So the intrinsic value for Costco is going to be $597.78 a share. Let's see what the Wall Street analysts believe the price target should be. So Wall Street believes that Costco should be valued at $717 a share. The high estimation is $870 and the low is $585. So with our estimation, we're sitting somewhere around here. So we said 597, Wall Street says 717. So after hearing everything and researching the numbers and learning more about this company, I want to figure out what an acceptable buy price is because I don't want to just willy-nilly buy in and overpay for the company. So in order to do that, we're going to bake in a margin of safety to the intrinsic value to figure out an acceptable buy price. So at its current trading price of about 731, sometimes it can go up to like 735, sometimes it can go down to like 720. But in this case, we're just going to plug in what it's trading for. With a 5% margin of safety baked in, then the acceptable buy price is $567 a share. So right now, Costco is overvalued by $163. Now, if we bake in a 10% margin of safety, then the acceptable buy price is $538 a share, which, to be honest with you, I don't think we're going to see that number this year. So I think we can all agree that our intrinsic value for Costco is a little conservative. So let's go ahead and replace this number with what Wall Street believes Costco should be at, which is $717. Now, if we play with Wall Street's numbers of $717 with a 10% margin of safety baked in, then the acceptable buy price becomes $645 a share. And right now, it's currently trading for $731. So Costco is currently overvalued by $85.70 a share. So no matter how you spin it or look at it, Costco is overvalued. But sometimes it's worth paying a premium for an overvalued company that has solid fundamentals and a predictable, bright future. And to prove my point, just look at Microsoft, right? Their PE ratio is sitting at 38. And if we look at Meta, their PE ratio is sitting at 34. And if we look at Nvidia, their PE ratio is sitting at 73. So I guess the question that you have to answer the next time you're on the toilet and you're having pondering thoughts is, can a PE ratio of 47 be justified with Costco? So you're probably wondering what my thoughts are. I think at the end of the day, Costco is a wonderful and beautiful company, but I just cannot justify buying into a retail warehouse company that has a trading multiple of 47. I just can't do it. Now, this might be an unpopular opinion, but I just think Costco is trading at unreasonable levels. Their finances, operations, and numbers look fantastic, but to be at an almost 50 PE ratio, it's just too much for me. With that said, if I had bought Costco earlier on, like back in 2021 or 2022, I wouldn't have any reason to sell right now. The company is doing fine. Then again, Costco is one of those companies that seems to defy gravity. Slowly but surely, they always find a way to reach a new 52-week high almost every single week of the year. So it depends. How bullish are you on Costco? Because even if it's at $731 a share right now, does it really matter in the grand scheme of things when Costco is going to reach, I don't know, $750 by autumn? So I can conclude with this. I think Costco is the textbook definition and example of what a dividend compounder with cheese is. So what am I going to do? Well, I'm going to pass on Costco for now. I don't want to, but at $731 a share, hey, that's a lot of capital, and I don't have that much money to be buying shares of Costco. So I would rather use that capital to buy undervalued, high-quality companies like Starbucks or Apple, who are also on a dip right now. Please, I am begging you, do your own research and due diligence to figure out if Costco is good to you or no bueno. With that said, everyone, I'm going to go ahead and stretch out and then eat my breakfast. I love you and have a good day. Stay safe.